Hello and welcome back to Volatility 411. It's Thursday, February 4th. I'm Kevin Davitt, part of SIBO's Options Institute, and the S&P 500 index is above its all-time closing highs as I sit here. Quite the reversal in the broad market since late January. The VIX Index currently measures just above 22. The January 27th close was over 37. Now the 10-day historical volatility measure for the VIX Index is around 300. In the middle of March of last year, that same measure was about 350. 30-day SPX at the money option volatility has fallen from around 30 just over a week ago to about 17 this afternoon. The weekly jobless claims numbers this morning were an improvement versus the recent trend. We'll see what happens with tomorrow's monthly jobs report at 7:30 a.m. Chicago time. There's also seemingly progress within Congress on another round of fiscal stimulus. Democrats have proposed a scaled-back bill that would apparently send about $1,400 to roughly 70% of Americans, depending on an income threshold. Now, the 10-year yield in the U.S. has moved up to about 1.16% this morning, but it's off those highs as I sit here. The term structure for VIX futures has snapped back into a much more typical contango. The front-month futures are trading around 24.5. The March futures are trading 230 over Feb at 26.80. And the April contract is around 27.80, and it's flat beyond that point. Now keep in mind, the front 6-month futures were all over 30 at the end of last week. Big term structure moves on this market reversal. In VIX options, the activity has been running above average with a slight call skew today. About an hour after the open, it looks like a customer may have sold the June 35 calls and bought the June 28 puts on a ratio. They sold more calls, and in total, more than 20,000 of the calls have traded versus about 8,400 of the puts. All right, quite a week in the equity and volatility markets with the monthly jobs data due tomorrow. That's Volatility 411. Thank you for tuning in.